Last week, I mentioned in my S&P video that the S&P 500 has a positive seasonal trend helping to support it, which is a positive seasonal trend lasts until the beginning of May. And also, too, the S&P 500 was technically sound as it hadn't broken any key technical levels. I said to watch out for if the S&P 500 broke below the low that was set in February 2581. And also if we saw a sharp move below the 200-day moving average. Well, let's take a look and see where we are right now for the S&P 500. Last week we did see a little bit of a correction take place on Thursday and Friday as investors became particularly concerned with the potential for a trade war with China. So you can see here we didn't break that low of 2581 for the S&P 500. Which is key. We're starting to bounce up here as well, which is actually positive as well. If we take a look at the volatility we've happened recently, if we take a look at the RSI here at the bottom of the graph, if we go back and take a look, the RSI touched a few times 30, the level of 30, which is an oversold level for the relative strength index back in 2016. But in late 2016, 2017, all of 2017, and the beginning of 2018, it didn't even touch below, get down to touch below 30 or below. And you can see here that blue box, which marks the general trend for that RSI. We can see here that no points actually reached that oversold level, which is not normal. We set all sorts of low volatility records, of course, last year as well. We have had once again touched in February as well and bounced off of that, which was basically this run here. And once again, we saw that just bounce on Monday off the RSI level at 30. We can see it bouncing up as well, which is a positive sign. So yes, we do have more volatility in the market right now, and particularly when you compare it to what happened last year, it seems extreme, and it is a bit more than normal as well with some of the large point moves on a daily basis as well. But this is something that we should probably be getting used to, especially as the seasonal period for stocks finishes up in just over a month's time. But right now, the S&P 500 technically still is above the 200-day moving average, which is positive. Remember, if it breaks below the 200-day moving average, the media tends to jump all over that, causes some concern with investors, and very often they'll start to sell the stocks once it breaks below 200 days, the 200-day moving average. Right now, if we break above 2,800, I'm not saying that it's going to happen for the S&P 500, but if we did see that happen, that would be a very positive sign. It's a tough challenge, given that the seasonal period for stocks is only just over a month long from this period. But right now, we still are in this mini trading range that's being formed. We do have strong seasonal periods helping to support the S&P 500. April tends to be one of the stronger months of the year for the stock market, particularly the first half of April as we come into earnings season as well. So right now, the stock market is technically sound at this point still, hasn't broken any key levels, and we do have some positive seasonality helping to support the movement upwards here at this point. Thank you very much.